Check, check. Can everybody hear me now? Check, check. No sound? Oh, okay. Awesome, awesome. Well, greetings. Hopefully, everybody had a great weekend. Some of you've already made some entrance into the pitchfork class. And so we'll work through that slowly. Again, this is the Scans, Forks, and Fibos Monday night 9 p.m. Channel. And my name is Steve Greger, otherwise known as the FX Coach. Awesome. Awesome. So, just a little bit of kind of semi administrative stuff, and then we'll get underway. So, I'm kind of a nut about punctuality. Uh, excuse me. And that's just because when people make the effort to be here on time, I don't like punishing them and punishing them for the people that can't be here on time. And I know sometimes things come up. We got traffic, kids, work, things happen. So I'm not saying that everybody that late is bad, but I still don't want to punish the people who are here on time. So as we get going, trading is going to take discipline, and you can start to get that discipline down by being to these sessions on time. One thing I will comment, guys, is the habits that you have, the attributes you learn, the head game that you develop, the ego that you conquer cannot be compartmentalized. You cannot just grow in one area and it not impact other areas. You cannot grow in one area and still remain lazy in others. It's just not going to happen. So, discipline, be on time. All right, now this is a big one. I see what you guys see. So there's about 8 messages at a time in the chat box. And when you get 100, 200, 500 people in a room and people start chatting, stuff flies by. And I've got 5 monitors to monitor in addition to the control panel for this broadcast studio. So I'm going to ask that if you want to chat with each other, if you want to share stuff, get here early. That text box is open. You guys, chat box is open. You guys come here half hour early if you want and chat away with your friends. I encourage that. But once we start the session, I need the chat session to slow down amongst yourselves, and I need it to be reserved for you guys answering questions from me and you guys having the ability to ask questions. I don't want somebody asking a question and me not seeing it because 10 other people are saying hello, 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 and it goes by the wayside. So let's stay off the chat unless you're talking to me or unless you're answering to me, please. I will repeat this every session. One thing also that's happened, if you're really truly committed to your training, I have no problem being Facebook friends, but don't just send me blind Facebook friend requests. I don't know names coming up on Facebook from Adam. I'm not interested in being hacked, but I do enjoy having serious traders as friends. So if you want to be Facebook friends and you want to send me a friend request, that's cool. Just message me first. Tell me you're in my IMLTV classes, and then do your friend request, and I'll match the two up, and we'll connect. All right. Thank you very much. Thank you very much. But so I've got a ton of Facebook requests from people I just don't know the names, and so please don't think I'm being rude or smug or anything like that. I just have to delete them, and I will continue to repeat each session. If you want to be Facebook friends, send me a message first. Okay, some shared insight. You're going to need patience in your live trading, guys. When you get to trading live, it's going to happen. And I'm going to ask you to start now by exercising patience with the learning process. You're here for the long haul, and so have patience on the process and have patience on yourself Remember, nobody popped out of mama's womb knowing how to trade currencies. All right, that just didn't happen. So it's all a learned process. And like everything else, like any new life skill, the growth in your acquisition of the skills comes with practice, repetition. This is a coaching environment. Oh my gosh, my poor students are going to get tired of hearing this. This is a coaching environment. So it's up to you to ask questions. You paid the fees to be part of IML, and it's a shame to be in a coaching environment with 60 70 hours of live classes and how many ever you get to, and not ask questions. Okay, I like to be able to get to the questions, which is one reason why I don't like constant chat streaming by, because it's hard for me to catch the questions then. um, and I'll say this is kind of a bold statement, but it's true. I've seen this through the years. Your efforts to take the fastest way there are going to indeed end up being the slowest way there. Because what's going to happen is you're either going to have to go back, regroup, and start over again, or you'll just burn out and quit. So please take it at the pace that we suggest. Have patience, and let's go. We're going to talk about four main topics in here, and then miscellaneous stuff I'm going to throw out as trading tidbits. I do a lot of side teaching. Side teaching means if somebody asks a question or I'm on a topic and something hits me like, oh, they'd probably like to know about this too because it's related, I'm going to teach that part. And so the side teaching sometimes are not, won't have anything to do with scans, forks, and fibos or the head game, but I think they're worthy of your understanding anyway. So I'd get a loose leaf notebook and 5 tabs, or I would get, 4 or 5 small, small, not so thick notebooks, and I would label each tab or each notebook scans, forks, and fibos. So you can keep all the same content together because we will be skipping around some. So first of all, let me ask the first question of the night. How many of you got through the Pitchfork class in its entirety? Anybody? There's a lot there, I know. These aren't 5 and 10 minute modules. They're longer than that. Yeah, funny, Tim. All right, so I have a question into Aweber regarding the. Oh, you can log back. Okay, I see what you're saying. Okay, so here's the deal. Um, for those that weren't here last week, real quickly, I'm going to go to a black. If you go to, let me fatten that up a little. Oh, my writing is atrocious today. I have to write with a mouse, guys, so just bear with me. Tell you what, I'm just going to put it in the chat box because I can type. Well, most of the time. So it's forexpitchfork.com IML. And that's going to take you to a registration page. It seems that people with Gmail are having some issues. Okay. So you can use an alternative email, but the whole point of registering is not just to get to the class. The point of registering is so when I make additions to the class, when I want to put out tidbits, I have a way I could broadcast out to everybody. If I have you in there, then I can say something like 15 minutes before this class, hey guys, I have to move it back to 9:15. We'll go 9:15 to 10:15 tonight because of an emergency. So I can at least communicate with you a little easier if I have your name. Makes sense? And so if you go to forexpitchfork.com/IML, that's the registration page. Now, is there anybody that went there, registered, and did not get their confirmation email in return? Still. Yeah, I know. It's just some Gmails, so I don't understand why it's particular sometimes. Is there anybody that registered and didn't get to the material? Okay. So as we near the end of the class, I'll take a minute or two and put up the information again. I don't want to go digging for it right now because I forgot to make it handy right now. So today I want to talk a little bit about well, after you register, you should get a confirmation email, and that's what's That's what's a lot of Gmail users are having problems with. That email isn't getting through to them. So I'll work out something, but I need that registration. Okay, I'll get everybody in that class. So here's the deal. Let's talk in the most simplistic form. What's going on with a pitchfork? What is a pitchfork? Before we get to that, I want to cover a basic, and it's called Fibonacci. Now, the reality of things is this: Fibonacci rules the charts in all aspects. And there's more ways there's Fibonacci on the charts than you probably realize at this time. It's not just a retracement tool in your indicators. Okay. Nope. forexpitchfork.com/IML. So, yeah, maybe check your spam folders. Yep, I didn't have a registration last week. Now it is, because I want to capture you so I can communicate with you, changes to the course, additions, snippets, notices, etc. Okay, I'll give the username and password at the end of the class. So Fibonacci is everywhere on the charts. And let me give you an example. If you have a price move, and the only thing I'm going to need help with is when we get to let me erase that a little. Is when we get to me doing this stuff live, and I'm trying to see how long it takes for it to come across on the screen. I'm not used to the slow refresh. It doesn't look like it's too bad today. So what I'm going to tell you is that every one of these swing highs, as they progress down here, and every one of these swing lows on a chart on time period, meaning if I'm on a 4-hour chart, if I'm on a 30-minute chart, they are the result of some Fibonacci ratio in front of them. We may not always easily find it, depending on our skill set, our time on charts, but every swing high and swing low is the result of a Fibonacci retracement or ratio retracement in front of it. So what I mean by that is this second blue dot. Well, that's a 50% retracement of the 1-2 move. These labels mean nothing other than just keeping track of things. The fourth red dot there is nothing more than the 50% retracement of the 2-3 move. The 5 gets to be tricky. It could be several things. Okay? It could be an extended retracement, which means it goes past 100%. It might be the 161.8 retracement of the 3-4 move. So we're still talking retracement. and it comes down, passes 100%, and keeps coming down. It may be a projection, as in an Elliott wave kind of move. So it may be the projection of the 2-3 move, and it also might be 160.18. Could be 140, 1414, any number of things. But the bottom line is they're always retracements. They're projections. They're expansions from something that happened in front of them. And what that means is that every one of those red dots, which represents a swing high or a swing low, has huge amounts of Fibonacci-ness attached to them. That's my word, Fibonacci-ness. Okay? You have to understand that Fibonacci is present and how magical it is on the charts. Now, here's the thing about Fibonacci. A lot of traders think that the reason prices stop at Fibonacci is because traders could see them on their charts. And in modern day, there's some element of truth to that. In other words, we have some big move and it comes way down and then it retraces back to 38%. And let's say this time it bounces off the 38. There are traders that will contend that here, as the buyers saw the 38% retracement coming along, they got a little hesitant and maybe they exited the trades. Or the existing sellers in the move from the top down saw the 38% retracement coming up, and so they sold more to create more downward pressure. And everybody said, oh, well, that happens because they saw the 38.2% retracement on their charts. Well, that's not true. Okay? And the reason I can tell you that is because I have Fibonacci numbers that probably the most advanced traders in here have never seen, and price turns on them. So if price is turning on them and you can't see them, then seeing them isn't the reason it turns. Now, for those of you who are really serious about your trading, and I mean like you want to understand you can be $1 million trader in 12 to 18 months, then you're going to want to read up on something called socioeconomics. Essentially, socioeconomics will state that humans in mass behavior, that's not social, it is socio, that humans in mass numbers will make decisions and through their actions. And so when you go to hit buy or sell in your trading station, you are creating an action. And as a human, you're plugged into this whole thing of the mass of humans. And that's why Fibonacci works. Because it's a number set unknown to most people while they're trading that exists, that their buys and sells, which they just think they're doing through their own analysis, whether it be fundamental or technical, and the masses that act together create the price moves, and they create the bounces at these ratio sets. And like I said, when we get a little further on in here as the weeks move forward and I start showing you some of the numbers, the secret numbers, then you'll understand that it's not the fact that people see the numbers on the charts. Okay. Now, let's go back to my comment about every one of those swing highs and swing lows are a result of a former Fibonacci in front of it. So what we're really saying then is that that swing low and that swing high and that swing low, and I'll just label them right now 012. They are full and charged of Fibonacci-ness. Okay? Who is the author of what book? Did I mention a book? So, if you want to learn about socioeconomics, just Google it. You can actually go to socioeconomics.com. It's a science from Prechter. Prechter is kind of the current day Elliott wave guru in the marketplace across all markets. So, advanced traders, you're really going to want to know about socioeconomics. Okay? So, these are all supercharged with Fibonacci. They are literally, if I had neon, these points are just glowing with Fibonacci-ness. That's why they become such strong support and resistance points. Yep, that's correct spelling, both you guys, both JC and Forex Nuggets. So, hey, please don't give out the password in here. Nobody asked that to happen yet, okay? Prechter, Prechter. I want to say Richard, but I could be wrong. Okay. So they're just absolutely charged with Fibonacci-ness. So now let's go, understanding that, let's understand what Alan Andrews did in the early day. Now remember, he did this with, paper and rulers. And its origins, as you see in the Forex course, on the Pitchfork course, go back to Newton and Babson, laws of action, reaction, etc. So what Andrews did was he found the midpoint between this 1 and 2. And then he drew a line from the, in this case, previous swing low to go through that midpoint. And he called that the median line because it was the statistical median between 1 and 2. He then traded that for a long time, and he came up with several observations highlighted in that course. The first one being that as price left the swing low, 80% of the time, now this is one of Andrew's observations, but 80% of the time from leaving that swing low, price got to the median. Now that's a pretty strong statistic for a trader. And as a side note, success in trading is just about stacking probabilities. You stack probabilities as a trader, you're going to be very successful. So 80% of the time, price left it. It got there. There were a couple other observations he made. Once it got there, very often it bounced back down. Sometimes it went through it, and depending on the direction, it's called a gap or a plunge. Sometimes it would just go through it to the other, go right through it like a knife through butter. And there were other times where it would treat it like a kind of interesting beast, and that is, as price went through it and came, it would come back and check it and then take off. And that's a little creative license there with my arrow. That come back and check it is true of any strong support and resistance line. Now it's also interesting to note that when it does come back and check it like that, there's no line there. There's no line there. Trend line drawers would not have a line at that point. This is an arbitrary line based on a 50% of that distance and then drawn from the previous swing low. So that is not a trend line. So trend line drawers would not understand why it's bouncing at this point here. Let's call that A. They would not understand that. So what Andrews then, in teaching this and trading this, he realized something. He saw some of these bounces that came down and went up were turning around at given points. And so, just eyeballing it, he kind of had a hunch at what that was. And so he realized if he took that median line and just duplicated it and then placed it on the swing high at 1 and placed it on the swing low at 2, he created something that he called a median set. So it essentially was a median with an upper parallel and a lower parallel, and therefore it was a set of lines based on the median, hence median set. It was his students that essentially said, hey, Dr. Andrews, that looks a lot like a pitchfork. So that's how it got its name, pitchfork. But his observations in trading it lead to a handful of, we can't call them rules, we can't call them results. They're just called Andrews observations. And they have to do with this behavior of price once it enters the fork. Now, as this fork has been drawn, because in Andrews' day, remember, they're working off paper. They didn't have the tools and the technology we have to experiment real easily the way we can today with the drawing tools we have built into our charts. So there's two kinds of pitchforks that can be drawn. So we're coming to the first conclusion here that you guys need to understand. This is called a traditional pitchfork. Traditional pitchfork requires the pitchfork to have these 3 touches. So a traditional fork is either one of 2 things. This one, as I've drawn it, is a swing high to a swing low, and that always goes back, the third point is to the previous swing low. Now, something to remember about the angle of these things, if this is a swing low, do we expect price to go lower from the swing low? No. That's why it's called a swing low. We expect price to go up. So a swing low, the reason it's called a swing is because price should reverse direction. So if I go swing high to swing low, I need to bring my median back to and touch the wick, usually a wick, of this previous swing low. And the fork should be pointing up. On the other hand, what if I have a fork where I have price never moves backwards. And it'd be nice to stay the same color, Steve. Trying to draw it a little smaller and I'm having an issue there. Yo, behave. All right. So what I have with this fork is a swing low. It moves up to a swing high. I therefore, over here on the downside of the fork, or a down move, as I've noted there, we go from the swing low to the swing high and then back to the previous swing high. So this fork then would look like the colors. That. And since we ended swing low to swing high, we're expecting what? Price to go up or down? We're expecting price to go up. No, we expect price to go down after a swing high. That's a good question, Ileana. Is it Ileana? Is that pronounced right? So we expect the swing low to swing high to go down. So don't make the mistake of going swing low, swing high, and trying to connect back to the previous swing low, because then your fork's going to be painted in the wrong direction. And while you may get some results, and we'll talk about that later on, that would be the blue fork would be incorrect. Because after the swing high, we don't expect price to continue moving high. We expect it to move down. So it's real simple. All you need to do is write this down or screenshot it or do whatever you do to record things. For a traditional fork, the up forks, the uptrend comes from a swing high to a swing low and then back to the previous swing low. For the downward facing forks, we go from the swing low to the swing high and bring it back to the previous swing high. Any questions on that? I'll get to your question in a second, Ileana. Good question, by the way. Okay. Any questions about which way we point the forks? Now, here's the absolute to-die reason why you like pitchforks and why you like traditional pitchforks. We know, per Andrew's observations, once price leaves this swing low down here, I'm in the upward facing fork here. Once price leaves there, it has an 80% chance of getting to the median line. Now it might get there right away. Sometimes those are pretty impulsive moves, so it'll make a quick run up. But here's the thing. That bounce is based on what? See, no trendline drawer would have that bounce to trade because he wouldn't have anything. There'd be no line there. He doesn't have a second swing high or swing low to connect to. So your traditional pitchfork gives you a trade before anybody else in the market can have it. That's why traditionals are good. From the time you draw this, in other words, from the time we have this swing low down here, guys, right here, I could draw that pitchfork because it only requires these 3 points, 1, 2, and 3, or 0, 1, 2. That's all it requires. I can draw that fork right then and there, right there at that white line. And I'll call that the now. Right there and now, current time, you can draw that pitchfork. And any bounces you get off of it are valid then. And guess what's cool about those lines? Those lines are loaded with, whoa, that's not going to work. I didn't mean to select rectangle. Those lines are loaded with Fibonacci-ness, so they're just glowing with Fibonacci. They're absolutely just glowing with Fibonacci. There's so much Fibonacci in them you can't even understand it. And so now for those people that thought, oh, well, Fibonacci is just something everybody sees on the chart, and therefore when price gets near it, people take a trade, or they take profit, or whatever. Just think that about 99.9% of the market doesn't use pitchforks. So they have no idea that line is there. They have no idea those lines are there. They have no idea that median line is there. I'm seeing it on my chart. You may be seeing it on your chart once you start drawing these. What happens when it stopped or bounces a few pips close to the median line? Well, now you're talking about trade execution. We'll get into that because then I have to, we have to stay indoctrinated to the difference between the old paradigm and the new paradigm and the way we trade. So I don't want to talk about that just yet. This will work on any time frame. You're chasing rabbits trying to do it on a 1-minute chart, although you can at times. The lowest I'll go is a 10-minute chart. It'll work on a 15-minute scan, absolutely. Do it all the time. Okay, question. There, we could get. I don't want to get too advanced today. I got to keep creep, crawl, walk, run. Remember patience. But it's a good question. Somebody asks, what happens if the second swing low is actually higher than the first one? That's your question, right? Si Jacho? You have to excuse me with. So there's two things we can do there, and we're not going to get into them today. Well, actually, three things we can do there. But it's still going to be a valid pitchfork. It's just we're going to have two possibilities. And then later we'll learn maybe three. And time will tell. As price starts moving inside here, we're going to know which one of these two or three it is. But that's absolutely fine if the second, as I've drawn it previously, the question was, what happens if swing low 2 is higher than swing low 0? And we have something that's called a Schiff pitchfork. And typically, if we make that the pitchfork as it's drawn, now don't get blown away by this. We're not ready to talk about this yet. But if we made this the where's my lines? If we made this the pitchfork, most of the time this is going to be pretty steep. It doesn't mean we can't use it. We just have to see how price reacts to it. But there's something called the Schiff pitchfork. And the Schiff pitchfork is when we come back and look at the 50% of that run from 0 to 1 right there, and then we would draw our pitchfork using that. So that becomes the median, and what it does is it flattens out the pitchfork some. So when we have a really steep fork, we'll switch to this Schiff at least at day 1. So let's not get too worried about that, but there's an answer for the question. That's all I want you to know, is there's an answer for the question. And we'll stay with that at this point. We'll get the Schiff and best fits and modified shifts in future weeks. I want to get everybody trading traditional because you will find trades with traditional pitchforks. You will find good and lots of trades with traditional pitchforks. Well, Robin, that's an interesting question. The question is, what is the success rate of pitchforks? Now, I told you we're in a new paradigm. And the new paradigm is not just this technical fun stuff I'm putting on here. It also has to do with how we do our money management. And I'm not going to get into that today because, again, I can't put 20 hours of teaching in 1 hour. Okay, you're going to have to stay with me, keep coming back. We'll get through all this. But in essence, what is the success rate of pitchforks? 100%. And I know that's going to sound stupid, but trust me, it's essentially that. The way we trade them. Now that's not blowing smoke at you, just trust me. If we get the bounce, we're taking the trade. And you'll see how we manage that with the least risk in the world. And so generally, if we get the bounce off a pitchfork, even if we're wrong, and it hits up here and starts to come and then it fakes us out, we're going to end that trade positive. Just trust me. That's why you're here. Okay? The thing you can't do is keep your minds closed to the new paradigm because you're so stuck in what the old paradigm is. You have to understand that there might be something more. So you have to keep your mind open and hang with me. Yes, well, that's why early on it's good to draw traditional pitchforks. Now, once again, guys, let's stay traditional pitchforks. We've had a few people from last week already posting some forks. It wasn't but a handful. And you know what? For the most part, bleh. But then we showed them a few corrections, and all of a sudden, hey, they got it. They understood what we were saying. So that's what you have to do. This is why it's a coaching environment. This is why this session and the way I teach is going to be different than everything else you get exposed to, because you're going to have a chance to hang with me. You're going to have a chance to post your pitchfork and have me and my other coaches who know pitchforks help you learn how to draw them right. Oh my gosh, come on. Trust me, if you hang with this, you should be paying IML $1,495 a month, not $149, because you're going to make some great money. And remember, if you weren't here last week, the reason we had the mindset to trade pitchforks is because we can make so much money for them. Yeah, I hear you, Sean. Right? We can make so much money. We're making 5, 10. Oh, I get to set the schedule. It's not Christopher. I might go to a third day. I'll see. I'll see how you guys are doing. Look, if you start cooperating and you are, yeah, 145, thank you, and you are interacting in the group, then I might add another day. Yeah, I know it goes too fast. Trust me. So let's stay with this, okay? Because I'm about 1/3 of what I wanted to do in this hour. So obviously I'm not going to get through everything, but I do want to get to live charts because a few people wanted to look at that. So let's stay with this traditional pitchfork. Let's stay with this bottom right hand chart, this little matrix that says in an up fork it has to be swing high, swing low, back to the previous swing low. And in the down fork, it's swing low, swing high, swing high. Now look, let me be clear. These are typically wicks, even small 1-pip wicks, but they're typically wicks. These fork endpoints have to touch a candle. You can't just arbitrarily have it hanging out somewhere. We can't have a swing low down here and you just decide to have your fork start over here somewhere. It has to start right there. It has to start right here. And then we come back to this point. Any questions on the construct of a traditional fork? All right, let me try and answer a couple questions that came up. First of all, you can draw forks on any time frame. But remember, let's go back to, real quickly, let's go back to Andrew's observations, because this won't make sense unless I talk about that. So with Andrew's observations, what we now know is, well, we got an 80% chance of that bounce. What's going to happen if it bounces? Most of the time, from that bounce, it comes down to the bottom median and becomes another trade. If it doesn't bounce, such as it gaps through this, it can go straight up to the upper parallel. That becomes another trade. It can go through it, come back and check it. That becomes another trade. So if you think about this, the trade down here precipitates a trade either here at K or a trade down here at L or a trade up here at M or a trade here at N. Now these aren't patterns, there's nothing to this. I'm just saying these are trade possibilities. So if you're a trader and you want to use these unique advantages of a pitchfork, with Andrew's observations talking about the high percentage of times it does exactly what you see here, it makes sense that you want a pitchfork that's not humongous. Because the more distance I put between these lines, the fewer opportunity I'm going to get to trade the advantages of this fork, which is bounces off these lines. See, if you draw your fork super big and I draw mine the right size, I might get 3 times as many trades as you have because the distance is, not so far to go. Now you will start to learn what swings really are in a given time period. All right. Any questions about the construct of... No, use wicks. Do you like to do scalp trading? Yes, but that has nothing to do with pitchforks. What do you mean, which numbers do you use? No, it works on all pairs. It works on all markets. It's a reality of price movement. Fibonacci is a reality of price movement. This is not limited to pairs. This is not limited to time of day. This is not limited to time frames. It's not limited to financial markets. Pitchfork trading is something, that's why you want to learn it. Because pitchfork trading you can transport to any market. Unless she's talking about the Fibonacci, Tim. All right, so because we're rapidly running out of time, but I want to come back to this. Up forks, swing high, swing low, back to previous swing low. Down forks, swing low, swing high, back to the previous swing high. Works on anything. Now, I only put some charts up about, on this computer, about 10 minutes ago. And a new set of layouts. So, well, it's a little longer than that, but close enough. So let me see if I can grab this whole box. I think I can. All right. So somebody was asking about crypto. So here's Bitcoin. Let's pull up a 4-hour chart. Got a long-term fork going on here. And I could tell you, say, you don't want to trade Bitcoin because the spread is ridiculous. But you can know when to buy and sell. So as an example, while this doesn't look like a tremendously great pitchfork at the start, one thing you want to notice here is, see that big wick? Whoops. Sharpen my pencil. Big wicks. Why are big wicks important? Now this is true in any aspect of your trading, but why is big Why are big wicks significant in trading? Does anybody know? The way you have to think of a big wick is think of price as a, yeah, there you go, Tim. Think of price as a little platoon or squad out in the field, and they're sending a scout in advance of their move. Uh-oh. What just happened? They're sending a scout in advance of the move. And if that scout gets to the spot he's going to and he sees the enemy there, he's like, let's get the hell out of here. Okay, so it is rejection most of the time. Now you might have a couple attempts. The more attempts, the better usually. So anyway, this is a very significant, we have some interaction here. This is called a best fit. This is not a traditional, which is why I didn't really want to go here today, but I'm running out of time. So there's a hit right there. I have another hit on this Fibonell. Price leaves the pitchfork twice, but this time when it comes back, notice it checks the pitchfork. Dives down, comes back, look at where it bounces. It knows that pitchfork. It knows exactly where that pitchfork is. And that's why when you have 1, 2, 3, 4 pretty decent bounces off this pitchfork, this becomes a great buy. And so if you bought your Bitcoin right there, you would rally up to here. And that's from about $3,000 to $4,300. So there you go. Big wicks are significant because the reach is being rejected more so than a small wick or just a candle close. That reach is being rejected. So there is your, somebody was asking about, proximity to the line. There's your to the pip hit, and here is your to the pip hit for the buy. Okay. Yes, it's a good sign of a reversal, or at least the move in that direction is ended. It might be a retracement, or it might be the full end of a move. Okay. Yeah. Again, keep coming back, guys. Keep coming back. You want to stay plugged in, I'd say, for at least a good 7 or 8 sessions to start to get a feel for what we're really doing. All right. Somebody asked, can I draw a fork from scratch so they can see what it looks like? Let me go to an actual pair. How about I'll go to the pound yen. I don't know if I have anything near. I have a 4-hour fork. Okay. So let me see here. All right. So let's just see. I'm going to grab my pitchfork tool, and what I'm going to do is I'm going to use this swing high, and I'm going to come down to this swing low, and I'll try coming back to this swing low or this swing low. We'll see if anything works. Okay. Remember, they don't always work, but when they do, they're great. It's swing high to swing low, so I have to come back to a previous swing low. Bingo. All right. And oh my, look at this traditional fork that caught the drop today. Leave your gifts and donations as you go out the door. So there's a traditional. We have a decent move down. There's your swing low. There's your swing high. We come back to a previous swing low because that's the formula for an upward facing fork. There were a couple wicks on some of these quad. These are called quad Fibonacci's. But boom, there it is. I'm not going to talk about money management today because you're not ready for it. I don't mean that to insult anybody. I'm just saying we're going to teach you not just this form of trading with Fibonacci-ness through the chart, but the money management that we use. See some here. Hey, let go. Yep, you gotta have that steeper, that first swing low back. All right, so that's the simplicity of it. Well, remember I said patience. Yeah, there would have been some trades um, based on how I trade. That would have been a trade too. And so we would have had that profit at least to the median. And this would have been a trade. And we would have got out of that with positive pips, but we didn't make anything out of it. And then this one here. Pitchforks is about setting traps. Pitchforks is about setting traps. And so that's all there is to it. So that's about, well, yeah, that's about as good as examples I can get in just jumping to the charts live. So draw your traditionals. Draw your traditional forks. Every charting product has their own tools, but I can look at this overall and see that there's a pretty good uptrend. I'd have to zoom out to maybe catch something over here that would give me a wide enough path to include everything. See, I do this for a while so you can get it. I look in here and I go, well, this is pointing up. Do I have a swing high going to a swing low? That would be a great place to draw a fork. All right, so that's going to be my swing high. That's going to be my swing low. And then I have a couple of possibilities to go back to for swing lows to test. Now see here, I already have data. If I'm going to use this as my swing low, I already have data. There's a difference between me drawing it now and drawing it here, but nonetheless, it doesn't matter. You can't say, oh, well, that's just convenient. You see what happens. No, I'm connecting this point and this point and this point, and whether you look at it here or here or here or here, it's still going to catch that same trade. Or whether you look at it over here, it still caught that trade. It's because it's these 3 points. There's no subjectivity in that. A little skill in determining which one. So once again, for a swing high to a swing low, the formula is swing high to swing low, back to the previous swing low with an upward facing fork. So with that, I'm just going to get my tool. Now I'm on trading view here. So I'm going to go click. I first one click, and then I go up here and just put my cursor on that candle and click, and drag my cursor down to that candle and click. And then I'm going to grab the median and move it down to the bottom of that swing low. Boom. I do not trade entry orders. You're welcome to do it. I will smoke your butt in pips, but you're welcome to do it. Okay? What we can do is come along, and again, TradingView handles this nicely. You're going to have to figure out whatever you're using if it works for you. I can set alerts on these lines, whether I want email or SMS, pop-ups, etc. So I just set alerts on my lines, which then will let me either come to the charts or open the charts, or I can see which charts. I guess I can't move those lines. Yeah, I'm sorry, guys. Wirecast is not my favorite platform, but it's the one we use. See, I have a little broadcast meter here, and it shows me that everything's fine. My monitor is a little slow as well. So it does depend on your internet speed, your bandwidth at a given time. So here's where we're going to get to in future weeks. I got to end this today. But let me go back here for a second, real quick, to give you a hint of what's coming and why this is so powerful. So, see, what I showed you today was how to draw a traditional pitchfork. We'll learn best fits. We're going to learn shifts, and we're going to learn the various functions that forks can do. So here's an example of a scan that was used. So we didn't catch that trade. We were just using the scan to draw a trend line. So you could have had the line and caught the trade. Maybe you didn't catch the trade, but it helped confirm the trend line, which means guess what? That's a trade. So the scan would have probably gone off the chart at that point. It would have probably exceeded the limitations of the scan. It may not have. But if the scan's gone, this is what we're going to pick up with on Wednesday. The Fibonacci-ness of the line or the zone doesn't go away. I'll say that again. The Fibonacci-ness of the line or the zone doesn't go away. So here's another one where we missed the trade. Oh my gosh, I was sleeping. Oh my gosh, I didn't bother checking this one. Oh my gosh, whatever. I didn't catch the trade. I simply come to the charts. Now this is a best fit, and we'll talk about how we size this up later on. But guess what it did? It gives us alternatives for money management, and then it gives us secondary trades. And note that secondary trade ran the full pitchfork. Ooh, ah. It's another best fit. I want to again go into details now, but we used some elements inside the fork, well, inside, and moved our median up and down until we got those hits. And those happen to be the X and this 2 down here with an outside hit. Generally, when you get inside hits and outside hits that line up, you have something worthwhile, and therefore we got the hit at the median. So, but these are best fits. I don't want to get into too much best fits. I don't know if I have anything else today. We want to stay traditional today. This one's so cool, but we'll save this one for next week. All right, so forexpitchfork.com/uppercase I, uppercase M, uppercase L. That'll get you to the registration page. I have Gmail. No, I have Aweber looking into why Gmail accounts are not being sent their confirmed emails. Go to take screenshots or use, depending on which charting package you use. How do you know when a pitchfork is done, then draw a new one? Technically, it's a great question. Technically, on time period, every time you have a true swing high or swing low. So what am I talking about on time period? Let's say I'm on a 30-minute chart, and this will be the last thing I do today. Let's say we're on a 30-minute chart. These are not swings. These are swings at lower levels, but those are not swings on the 30-minute chart. The true swings on the 30-minute chart are the big tops and the big bottoms. Right? And even this third one here is probably more just a retracement the way I've drawn it. So 1, 2, and 3. So technically, every time you have a new swing low, swing high, you can draw it. But we're not going to get rid of our forks too fast. So in other words, here I would have an upward facing fork, regardless of which way it's going. And then here I would have a downward facing fork. I feel like I'm doing yoga. Here's your upward dog or backwards dog or whatever they are. So every time you have a swing high, swing low combo, you can draw a new pitchfork. The other one's still valid. And a lot of times you'll see squeeze plays, like if this one, as I drew it out, this would be called a major energy point. Because in this case it's a median intersecting with a parallel. But price typically in those, what you'll see happen is they'll squeeze. And then maybe it takes off up here. So we'll get to all that. I can't do it all in one day, guys. There's too much. All right, one last time. I'll end with that. So traditional forks. Traditional forks, a third grader could draw because you're only connecting 3 points. So for the up move, we go from the swing high to the swing low. Those are the key points. Swing high to swing low, and then back to the previous swing low. For the swings that end with the swing high, when I say start with, what I mean is what is the first as you come from the left of the chart? What's the first thing you encounter here? The swing high or the swing low? It's the swing high. So it's drawn swing high to swing low, back to previous swing low. Here, as you come from left to right on the chart, the first thing you encounter is the swing low. So this one is swing low to swing high. And on the down, swing low to swing high, back to the previous swing high. Excuse my writing. And so, boom. So swing low to the swing high, back to the previous swing high. Oh yeah, pitchfork. Anything that brings termination. So scans, we'll spend a lot of time with scans. We'll spend a lot of time with pitchforks and Fibonacci, both in the horizontal, as in the way you're familiar with Fibonacci, and then Fibonacci on its angle in the direction of the trend. So it works really well with Fibonacci. It works really well with scans. You know, look, it determines the price reversal. So if you're using a third-party system, I don't care, you're a master Elliott wave trader, the Elliott waves will end on pitchforks. All right, go ahead and type in the username and the password, please. So once you register, you're going to need to, it'll take you automatically to the page of the course, but it does have a password combination. So the username is IML, all in lowercase. And then we have to have those funky Windows requirements, uppercase, lowercase, numbers, characters, kind of stuff. Nobody remembered the password? There it is. uppercase I, uppercase M, uppercase L, dollar sign, all lowercase, Forks 17. Yeah, you're going to want to get in there with your email. I appreciate you wanting to get to the course, but you're going to want to get in there with your email because your husband probably is going to want to know all the things I send, and then you're going to be missing them unless he remembers to send them to you. All right, got to run. I'll see you guys Wednesday. Be here, be square. And as always, remember, life can be short. So for those people you care and love, let them know you care and you love them. Y'all have a great couple days. I'll see you on Wednesday.